Welcome back to Stocklabs. Time for another market recap. This time for the first full trading week of December. Ended on the 10th, and we had a little bit better market than we've had in recent weeks. We were kind of looking for that in our recap last week, that the market would sort of find a little bit of stability, which it's kind of did on the surface level. I'll go to our major ETFs. Eight. And yeah, so oil bounced, which generally helps risk in general. Dow was up 3.15%. We had S&P up 2.3%. Q's little bit of a laggard. I mean, if you consider that the market was up, 1.5% for the Q's is not much. I mean, it makes those moves in a day a lot of times. And then the Russell was a real laggard, down 1.6%. So you didn't really have much action for the broader market if you consider uh, IWM having 2,000 stocks versus the other cap weighted indices that um, their performance is skewed by some of these big guys. And for our mega caps, I think this was kind of mixed. Let me see. Yeah, so they were mixed overall. Apple had a huge week, up almost 14%. This sort of, I mean, it makes me a little nervous when you see these. I mean, these are gigantic, multi-trillion-dollar companies. They shouldn't really be having the types of performances like 14% in a week, or even the other way down. You have Netflix down 8% for the week. Um, it's down here around 600 again. It's kind of been in the 600, 700 range. Netflix has for a while. But just seeing these big moves from these mega capped companies is, I don't know, to me, it's indicative of something a little bit off. Um, Generally, you wouldn't want to see this sort of stuff happening. I mean, we had decent weeks from Google up 4%. I mean, that's sort of a more normalish performance. Microsoft up 3.5%, and then you had Amazon down 2, Nvidia down 5, um, Tesla Tesla down 6.5. So overall, actually, they were flat to down, basically buoyed by this giant Apple move, and then the rest were more soft-ish or mixed. If you use Google and Microsoft to balance them out a little bit. Um, as far as our breadth for the week, if we look through all of our sectors, it wasn't spectacular. You see a lot of these industries hugging the flat line on a median basis for the week. Healthcare again down. I mean, just a brutal trend for healthcare. It's been for months. And even the median tech stock was down, almost 4%, 3.7%. If we go to our subsectors, wait, why is this? Oh, I'm not on week. Okay, week to date. Um, we've got only 5 sectors up over 5%, and they're all sort of like reopening type plays. I had decent move from these semiconductors. A couple other semiconductors on here were having good weeks, but overall, not overly strong. Trying to see. So that's 50, 75. Yeah, so I mean, you had a decent number of sectors up, but they weren't up a lot. So the breadth was on what I would call the weaker side. If I sort these from lowest, and the stuff that was down big. So whatever is in electronic stores down 17%, solar down 13, Chinese stocks down another 12. They've been getting hit for months and months. Um, Nuclear down 11, EVs down 10. I think the air has really come out of this EV trade. Um, and cannabis getting hit. I mean, that's sort of just a speculative sector. Silver, typical down week, -9%. Biotech, yeah. So you see a lot of these. Biotech, gene editing, with the healthcare slide have been um, pretty common on this worst performers list. And then gold and silver are generally getting whacked on here too. Okay, let's jump into screener, and I'm going to go through the market cap weightings. So 1 to 5 billion, down 1.7%. So that's kind of was tracking IWM. 5 to 10 billion, down 1%, so better. And whoops, large caps, 50 to 100 billion cap, flat, down 0.25%. Mega caps were up 140 bips, so you could see like there was a big jump in performance when you jumped over 50 billion cap. And then Terra caps up 130 bips. So you could see like the only place to really be was in stuff over 50 billion cap. I've mentioned this in Pelican Room, a handful of times in past few weeks, basically, jokingly saying, don't even look at stocks that are under 50 billion market cap. I mean, it's a joke, but it's also serious because everything below 50 billion cap has been sort of a wasteland for a while. Even when IWM was moving up, somehow, the majority of stocks that were still in that cap threshold, they weren't running very hard and they weren't sticking to their trends. So over 50 billion cap will keep you out of some trouble. Even though the market overall had an okay week, this week it was all in the higher capped stocks. It wasn't like the broader market was really playing along with what the indices were showing. So if I jump into intelligence to sort of see what the coming week has, okay, so this is something to do with energy, then mid caps and this IBD 50. This is sort of like, I want to say this is akin to like ARC. It's a lot of those sort of like new age, supposedly tech leaders of the future, that sort of stuff. So we'll see. Okay, less than -4. Less than. Okay, and down. Okay, so DRIP is rated bearish, which is bullish energy. So we had a bullish energy ETF on, rated bullish, and we have a bearish energy ETF rated bearish. So that energy sector could be good next week. And I do sort of like for a little bit of a catch-up trade with the smaller cap stuff or the real economy type stuff to maybe rally and catch up with the larger indices. And who knows if the larger indices will extend higher or if they'll just churn at the top and everything else will just inch its way up. But yeah, so this week we were looking for a bit of a bounce, or at least for some stability in the market, and that was based on, we had this oversold signal almost 2 weeks ago, right before December started, and we did see some incremental weakness in the couple days after it. But really, this signal, once it locked in, it should have it should basically be providing support for the market, which it did. The market, at least the S&P and the Qs moved higher, since this signal. I can show you. Okay, so we were at 12-month. So yeah, 12-month. You see it here in the table on this day, and we're basically up, 200 handles in the S&P since then. So pretty good bounce, I'd say. Yeah, so that's about it. I mean, seasonality for December is, we went over this, is a little meh, could be higher, could be lower. But since November finished so weak, I think maybe the December seasonality, maybe some of the performance from November is going to be shifted to December. So I sort of think that you're going to see an extension of the rally eventually by the end of the week this week. Although there's a chance that, not a chance, but in my opinion, it's going to start off soft just because the overall feeling of the market throughout the week was soft this past week, even though the indices were moving higher. So I don't know if this is sounding convoluted, but I would expect maybe Monday, Tuesday to be down-ish to flat with, stocks not participating well, but then by the end of the week, everything to reverse higher and basically extend the rally or maintain the rally that started this week. So yeah, not too bad of a week. I mean, a little bit of a break from just everything going down only the last while. That big week from Apple up almost 14%. That's sort of something that just like you make a mental note of it, and probably sometime down the line you look back and think, oh, that was kind of crazy that happened. But as for now, we're just trying to get to the end of the year. Next week, should be pretty good. I think you have a chance to just buy dips throughout the week and finish strong. So that's all for me, and we will see you next week when we recap how we did, or I'll talk to you guys inside Pelican Room throughout the week. All right, bye everybody.